Hello, can you hear me?
Yes.
Thank you. We are going to start in a minute. Good evening to all of you. So let me start module number 4, which is about time series forecasting. And I think I asked the discussion. Discussion is about Standard Poor and Dow Jones Index, and also the stocks that you prefer from your own side. So let me start with pulling the something, this is, you can get the data for your discussion from Wall Street Journal, even Yahoo Finance, Google Finance, and they also provide the data. So let me go here, Standard and Poor, and right here, if you can see this, so historical, you can see when you put the historical out, you can see the download spreadsheet, and you can select the range that you need. Let's say I just wanted to do from, can I put like 2000? Okay, December 1st, 2000 till now. And I can go and, is it giving? No. Or it is taking time. Let me get very recently of. So this is just giving me, let's say 1 year later, 1 year before, so 2021. And then I go, I think, what this says, historical price and what date it is giving. So basically I'm getting about 1 year data right here. When you look, they have the option, Google Finance has the option, and Yahoo to get the as major US stock, you can also get major US stock. So basically the data can be extracted from here for your discussion purpose. And US, again, I'm just going to go on Standard and Poor, historical prices. And I can one day, okay, here I can put the option, and probably then I can get, no, year to date, 5 days, year to date, and 1 year, 3 year. Okay, I think why then they give this option if, let me, 2022. And do I need to subscribe? I'm just thinking. This is one way. Let me check other way. Google Finance, Yahoo. Because I got the data that I shared in assignment from Yahoo Finance. And let's say I go for Amazon. And here we go. Historical data. And I can download here, for example, here, if you see, and here I can 5 year, max, I can put the max amount, which is starting from, and then I can apply, and then I can download here. And I believe I can see, but I'm logged in into Yahoo. So I hope you can see my data. Can you see this? I'm starting right from 1997, the day Amazon is listed. So you can see from 1997, and what is the day today? March 6, 2023. So basically, you can get the historical data as much as you want. So this is, for example, Amazon. Similarly, you can choose the stock that you want. For example, let's say IBM. And here you have the historical data, and you can choose the range that we just did. For example, max. And so max it was, and then apply, and then download. You have Excel data from 1962 till now. You can see 1962 till now. And so basically, this is the way to get the access, because many questions are asked by student. I'm not able to get the data. Therefore, first option to explain the data, how to get the data for your discussion and for your future purpose. So this is the first thing. Now, second thing I'm just going to tell. This is what is the data I have for you to look into and do the fill in the blanks. So basically, I have some data which you can see here. Before doing the before answering the questions, please see that whether you are choosing the right stock. For example, you can see this is Amazon. When you look into this is IBM. This, when you look into the third one, this is Verizon. This is Intel. This is JP Morgan Chase. So select the right, because this spreadsheet is attached almost in all fill in the blanks and ask, so don't go by like this. You just see which stock has been asked, IBM or JP Morgan Chase. Or so this is, for example, we are going to learn the trend forecasting. Basically, this is the technique that based on past data, we predict the future value. How we can do that, so this is the, let's say this is the data. And let me put this data in my Minitab. I'm just copying this data from here and going to put in Minitab. And okay, now I have Minitab. Look into. So I have the data now. First thing I need to see the trend, how the trend is going. So here I can select any of the, this is the opening, opening price. This is the high price of the day. This is the low price, and this is the close price. So all the stocks are in this form: opening, closing, high and low, and volume transaction. So we are going to just see the open, high, low. So let's check only high. I go under statistics. We have time series and we have trend analysis. So this is the option that you have. Which variable you want to select? Let's say I want to select high. And now we have 4 trends here: linear, exponential, quadratic, and S-curve. Which one you want to use? So this is the first option. Now let me start with very basic question that I have asked in assignments. Let's say I have $10,000. I have $10,000 and I need to invest for another year. Let's say I'm going to invest in Amazon. How much I will get after 5 years, after a year? So let me see very simple calculation here. So let me go. So let's say this is the last day of this high price. How many stocks I can buy? How many stocks I can buy? 10,000 divided by what is the price of a stock? 1184 is the one. How many I can buy? And that comes to precisely, if I do the calculation using calculator. And this is how we do the investment of our. So here I'll do 10,000 divided by 1184. How many? About 8.85 or 8.45. So we will get the stocks 8.45 roughly. Okay, this is what. Now we need to put for 365 days. After 365 days, what would be the value? How much value, how much return on my investment I will get? So very simple. Here I go under statistics. I go under time series, trend analysis. So basically we go on trend analysis and I look into the high part. Now we have 4 trends. Which trend is going to be the best option? So let's look into that. Linear. Okay, I go under here we have and stamp and I just put the date here. So stamp is the date, then this date is plotted on x-axis and high value is on y-axis. So okay, let's look into this. So basically this is the model that we are getting. So you can see this is the model we get. And this is the best fit within that. You can see this is the line linear because it is asking linear. So this you can see this is the line is, linear one. So basically this is the trend coming. Now we would like to see what would be the value after 365 days. So I go statistics, time series. Now we have a stamp right here. And now I go under generate forecast. Generate forecast for 365 days. That is what I'm going to do. And let's look into this. Where is the? Here you can see. So basically you can see here, this is the data till now. And this is the forecasted one. This 365 days. This is the 3. So what is the value you get at this point after 365 days? You get 842. That means if we use the linear forecasting model, we are going to lose the money. Why? Because I have 8.45 stocks into, 8.45 into 843. I'm just roughly 843. So I put $10,000, but I'm getting 7,123 at the end of, after 365 points or number of days, then certainly I'm losing money. So probably, this model is not working because you can clearly see what we need to see. These are the measure, accuracy measure. Higher the value of this means there is a difference between actual and forecasted. Actual and forecasted means this you can see this is the, but this is not the correct forecast. Then we have to check another trend. So let me go and check statistics, time series, trend analysis. Now instead of linear, I'm going to do the exponential. And I think I put the stamp, yes. And now do it. The model is this. I'm not going over this, but you can clearly see. So here I'm getting 1563 value. And now you can see this model, you can see the accuracy measure and you can see the trend is going this way. The forecasted value is also going in this way, in the same direction. So this looks like, very good model because the forecasting is completely overlapping on actual numbers. So this model seems to be better. And here, how much value I will get of my stocks? Let me, where is calculator? So here you can see I had 8.45 stocks and the price becomes now after 365 days, 1563. And now I invested $10,000 and I'm getting $3,207 on the top of my 10,000 investment. This is my benefit. This is my return on investment. This is my value of my money after 365 days. So now, okay, which model is better? So we checked two models. Now look into the third model. Statistics, time series, and trend analysis. Now I'm going to check the quadratic model and doing the same thing. And here you can see, this is also looking good, but here, look into these accuracy measures. Oh, this is accuracy measures, which is difference between actual and forecasted. So these are the three things they come. Now let me do the fourth one so that we can compare all of them. Stat, time series, yeah, and S curve. So here we have I mean, by eye, by eyes, you can clearly say which is. So this is going in this direction. This is going in this direction. There is a clear gap. These are the, these are the clear issues. So now look into that and compare. So basically, we can clearly see this model and linear model is not good one to predict or forecast. Let's compare the quadratic and this. So quadratic value is MAPE is 32.39, MAD is 47, MSD 40. Now look into this. This is smaller. You can clearly see this is higher value, means this is not that accurate than exponential model because these values are smaller. So we prefer the smaller value. You can clearly see the other things. This is linear. You can see much higher. You can see these are also much higher. Therefore, which is the best model for this? Certainly exponential model. And we know in last 20 years or so, the growth Amazon achieved, no one has achieved. So the exponential model is the perfect model. And now let's go into the so this is the answer. How to get the answer? You get $3,207 benefit, or the way question is asked, you have to answer in that way. So most of the questions are related to these. So this is the first thing, to identify the trend and do that. So this is, now there are other method which are called averaging method, smoothing methods. Those are useful when we do the small number of, or when we have short period of data, like few data points. Let's say I'm going to do a simple forecasting here and how that works. So I just do statistics, because after next value, it becomes exactly the same. Forecasted value or numbers will be exactly same. So I go under time series analysis, and here we have moving average. So I'm just going to put high. Center moving average, generate forecast. What is the moving average? 4, 5. What is the 4, 5 means? They take the average of last 4 or last 5 values and they generate next forecast value. So let's say I'm just going to do 5. Center moving average. Okay. Generate forecast for next, let's say 20 or next 365. The same thing we did here. Starting from 3000 or 3020. Yes, because we have the data point up to 3019. And now let's do that. Oh. Sorry, trend moving average. Oh, I just generate forecast. Can it go for? So here it automatically forecasts 3020. And you can see here, I mean, you will see all the forecasted values are same. Moving average and all, when you have only 10, 12 data points, and for example, you have January, February, March, April to December data, you want to forecast next month something, then you can do that. So you can see all the forecasted value will be same. So this method are useful for very small 3, 4 or a small period of data, but not for trend analysis and other, because you can see the forecasted value here saturated, or same value. You can see the same line. Long life, the value will be the same, then there is no. So this is having similarly other method, they are not useful if you do for bulk data or long data, or tons of data, or you can say thousands of observations. Those are not practically useful, but useful for a small number. So how it works, you take the average of last 4 and make the make the forecasting of the next, that you can clearly see. So this is the trend analysis and trend forecasting in Minitab. Very easily you can do all the things. Now I would like to talk about little bit about Dow Jones index, or how these index are formed. So let me tell you about. So they are nothing but a weighted average. So I just use, so hopefully you can see this. Which company has what value? So for example, here, if you look into Dow Jones, 3M is the 2.41%. How the index is formed, how they do the indexing. When you looked into Dow Jones or a Standard or Poor or Nikkei or London Stock Exchange or any other thing, Apple has 2.84. Biggest is Home Depot. So Home Depot, how much is 6.27 in Dow Jones index? Biggest contributor is Home Depot. So this is the value that they have in terms of that. Walmart is 2.94, and Workens, you will be happy. I'm just going to tell, one thing about so that how you can see. You will be surprised to know that, this company is the biggest contributor in US stock exchange. Why? Owned by Warren Buffett, Berkshire Hathaway. I mean, since you are already working, you can know what are the. So if you look into this, where is that? So here, these are the assets owned by Berkshire Hathaway, and you can see what percent of Goldman Sachs. Where is that? Okay, here you can see ownership of this company. Amazon, it has now negative ownership. American Express, it has 20% ownership. In Apple, it has 5.63. Bank of America, 12.73. So biggest company, Citigroup, it has 2.63. The Coca-Cola is 9.24. So you can look into General Motors, 4.28, HP 11, 12, Kraft and Heinz. So you can look into the companies that is owned by this company. Therefore, how big contributor is this? So if you look into Dow Jones Industry Index or Standard or Poor, most of the things, these company, Coca-Cola, because of indirect or direct contribution by Berkshire Hathaway, Goldman Sachs or IBM or this or that, Visa or this, so they have the contribution. So how do they do it? How they do it? So look into this. So this is the formula. This is the index weight, 2.5. Total is 100%. Total is 100%. Now let me go on the slide part. So index number, which is very important. So you can, the relative index for period T is Y1 divided by YT, means as of now and first day when this was incorporated. So how do they do it? If you have a weighted index, how to calculate? It's very simple. Suppose you have 3 companies for your index. So company one, let's say, is 40%. Company 2 is 30%, and company 3 is also 30%. So how you can do the index of this? By just simply doing 0.4, which is for into as of now, what is the value of the stock today, and divided by, so YT upon Y1 plus 0.3 XT divided by X1 plus 0.3 X, or I mean any other number, ZT divided by Z1. So the day one, when it was incorporated, the value, and today. So let's say Amazon was incorporated in Dow Jones, and the day that its value was, let's say, $79. Amazon, $79, and today its value is about 1,200, 1,100. And Amazon weight is about 2%. So 0.2 into 1,100 divided by, 79. I'm just using mouse. So plus, let's say Home Depot is 6% to 0.6. When Home Depot was incorporated in this Dow Jones, it was, let's say, $50, and now today is like $500. So this is the way you can calculate these indexes. Different index, you can get to know what are the contributor in standard. So time to time they remove the company if company is not good. They include a new company. So you can see in Dow Jones when they incorporated, which are the former components, historical component of Dow Jones. So you can see on August 31, what they included, what they removed, you can clearly see. And that's how Dow. So if companies are performing, Dow Jones will increase its value. So this is the today's class. If you have any question, because this is all about we are going to learn in this module. Or when to plug one. Can you go over binary predictor? I'm not clear when to plug 0 or when to plug 1. Okay, binary, just a minute. So this is, so Dana, this is related to, if you ask about the previous course, a previous module, just a minute. Let me stop the recording.